FX Nation, what's up guys? Welcome back to another video, and in this video we're going to go ahead and take a look at our trade setups from London, and I believe some also from US session, most from London though. So let's just go ahead and jump right into it, guys. And the first thing we're gonna talk about is we're gonna talk about the pound. And the pound, basically we're only going to talk about the pound because we had we had news on the pound at 4:30 this morning. So let's just take a quick look at that real quick. And it was right here. So anytime that you see news like this, right, where you have 1, 2, 3, 4, 5, 6 stacked on top of each other. Typically, you're going to get this for pound, for GDP. You're also going to get it for the CAD. That one's at 830, and then also USD as well. So whenever you see these, it's a very high likelihood that the market will be moving very rapidly compared to how it normally slow and steady moves. So very careful during this time period that if you don't know how to trade the news, that you're not in a trade at that point, because it could essentially take you out of the trade, and it could negatively impact you a lot. Just like how we saw on the JPY pairs the other day, where it dropped, a couple hundred pips. So right here, actually. So imagine you had, you were buying here off of this W here, and then you ended up getting that, and you didn't have a stop loss on it. You would have blown your account easily. It was a good 600 pips. So yeah, so very important that you pay attention to when the news releases are. Now, in this video, what I want to do here when we talk about the pound is I'm going to talk about more of how you would have been able to catch this trade on the pound using the news, okay, to your advantage instead of disadvantage. All right. So as you could imagine, pretty much all of the pound pairs did exactly the same thing. Okay. And so what we have here for pound JPY is we have a nice small Asian session, typically 25 pips or less, right? That's one thing. Another thing that I noticed about this this specific pair is the fact that look at all the EMAs. They're going straight across, right? They're not here, down here like you would normally see them. They're just literally going straight across price action. Okay? Whenever you see that, that is a very strong indication that we're going to have some type of a break happening. Okay? Because as you can see, when we go back, the EMAs like to be spread apart, right? So when they're together like this is a really good sign that there's going to be a break at some point very soon. So how can we take advantage of that? And in this instance, the best way to take advantage was with the news. So here's our Asian session, and you see what market makers are doing. Right out of the gate, they make 3 aggressive moves down. 1, 2, and 3. Okay. Now, what do you think market makers are trying to do here? Okay. What do you think they're trying to do? Right? If you think about it, if you have like breakout traders that are trying to wait for a break out of this range here, what do you think that's going to do to them? Right? It's going to get them to sell. Okay. Now, if this candle doesn't get them to sell, this candle will get them to sell. If that one doesn't work, guess what? Here's another one. Right? So typically you see three moves to the low, and then they get the hell out of there. Okay. Now, these moves happen before the news. Okay. So when you studied market maker long enough, you kind of just know what the market makers are doing, right? So in this particular case, knowing that they're making a false move right before news is going to hit, it's just a way for them to get people to put in sell orders so they have enough buy orders to make this move happen. Okay, because they can't buy and make this move happen unless there's a lot of sell orders to make it happen. Okay, somebody has to be selling for them to be buying. Okay, so what do? They move all the way down and they make it look like it's a break to the low. Okay, and look what happens. They collect enough contracts at 4:15. They settle at 4:30, which is when the news came out. They don't do anything on this specific pair, right? But you already know, if you've been trading market maker long enough, you would have already known what the next move is going to be. And that's just going to be them rising out of this, right? And so you would have been able to catch, 148 pip move. So let's look at a different pair. So let's look at pound CAD. Pound CAD, same thing, right? We have a range here, evasion range of, this one's a little bit longer. This is about 40 pips or so. We get the move down, get people to sell, so then they can have enough orders to buy. That's the whole game between them. Okay, that's the entire whole game for them. All right, so if you ever want to trade news, number one, you need to make sure that you're doing it on a demo account and practice first. Number two is you need to understand, cycles and levels that market makers use. And number three, you just need to understand what they're doing, what they're thinking. Okay, you need to stop thinking like a retail trader and start thinking like a market maker. If you're a market maker, how can you get the orders filled that you need if you want to go long? Right? You got to fake them out to go short first so you can get the orders needed to go long. Same thing here on pound NZD. They started early. They started since yesterday. You see this? Look. They started early, all the way down. And as soon as they got enough orders, boom. They came all the way up. All the pound pairs did the same thing. I mean, look. Very thin Asian range. 3 swipes to the low. And boom. So theoretically, you could have just done this on all the pound pairs, because they all did the same thing. See? They all did the same thing. And your goal in most of these, because of the way that the EMAs were, you would have just taken them to Mayo on all of them. All these moves were over 100 pips on each one. So just imagine if you're trading, all 6 of them. 600 pips if you traded all 6 of them the same way. This is just one example, guys. One example of how you could potentially take advantage of a big news release like this. Okay? And if you go on down, you can see when the next one is going to happen. Here's CPI right here on Wednesday. Okay? So that's another one. Here's the CAD CPI right here, 8:30. Okay? So This is just something that you can use to your advantage. But before you can do this, you need to understand and be consistent in just regularly trading the market maker method strategy, right? You need to be confident enough before you start doing this. But I just wanted to show you this so you understand that it's possible to trade news and not be afraid of trading news. And I have a video that it'll come later on, but I do have a video that shows you specifically that we go into a whole video on trading specifically the news that we'll get to. But I just wanted to show you guys that quick glimpse. All right, so let's go ahead and jump right into the trade setups that we saw. And so one thing I wanted to mention real quick is in the chat, in our Facebook group chat that we have, which if you're not a part of that group chat, all you have to do is go to fxntrading.com, sign up for a free membership. You'll get an email with a password, and then I can share with you also the link for the chat. I'll put everything in the description of this video so you'll have access to it. But in the chat, we talked about the Aussie pairs and how I was looking for them to go to Mayo, and most of them. So some specifically that I was talking about was Euro AUD, Pound AUD, AUD USD, AUD Jappy, AUD CAD, and AUD Swiss. So let's take a look at how they did. Obviously, we know that that Pound AUD made it to Mayo just fine. Okay, we know that. We saw that one. That trade itself was about 87 pips by itself. Okay, and then let's jump over to the other Aussie pairs here, and let's take a look at those here. So Euro AUD. So here is the setup for Euro AUD. Okay, here's our Asian session. We ended up getting a Type 1 setup, and this was railroad tracks that we needed for confirmation. Okay, so essentially you got out of that one about 30 pips or so. The goal, of course, was to make it to Mayo. This one, however, did not make it to Mayo, and that's okay. But the goal, of course, was to make it to Mayo, because that would have been a nice 60 pip, trade or so. But we got a good entry, which was off the railroad tracks here. Okay, so that would have been the entry, and then stop loss would have been 5 to 10 pips below that. And then, of course, the first goal is always to get to water. Okay, if we have that, depending on how the EMAs are. But in this case, the first goal is to get to water. Once we get to water, we want to protect our position by moving the stop loss from down here to over here. Okay, and that way we can at least, if anything, if we're wrong and it doesn't go to Mayo, at least we get something out of it. Okay, that's one thing. Or another thing that you could do is just take profit at water and be done with it, right? So this went to water. Okay, that was one trade, about 25 pips or so for that Euro AUD. Now, if we go back and check on AUD Jappy, we ended up having a Type 1 setup with an M formation here, as you can see. And we literally were like 3 pips, 2 pips away from Mayo on that one. Okay, but still a good trade that gave out another 30 pips. Okay, if we check on AUD USD, same thing, Type 1 setup, an M formation down to Mayo. Okay, so that right there would have been a good 30 pips as well. All right, if we check on AUD Swiss, AUD Swiss did not give us a setup to sell. It actually gave us a setup to buy initially. Okay, so if you look here, what do we have? We have the Asian range here, and then we have a railroad track in the middle of the Asian range. Okay, so that would have been what? That would have been a buy. Okay, because we're looking at a type 3 setup here with a railroad track, right? So that's the trade setup that you're looking at for AUD Swiss. Okay, and that produced 18 pips or so. That was the trade that you should have taken. We didn't get a setup here to sell AUD Swiss. Okay, even though it went down, we didn't have any setups here. Okay, we didn't have any kind of railroad tracks or a star pattern or anything like that. We didn't have anything like that. So there's no reason to do that. Okay, if the formation is not clear, you don't trade it. And then let's take a look at the other one here, which is AUD CAD. AUD CAD. The only thing that AUD CAD gave us here was this one here, right? This was the intended trade on AUD CAD. All right. So what happened, right? Your entry would have been here. Okay, because remember, it has to close below catch up, right? Stop loss goes there. Now, what's our rule? If within 90 minutes you're not in substantial profit, you close out the trade, right? So it's basically 6 candle bars, right? So it's 2, 4, 6. So on this candle bar here, are we in substantial profit? No, we're not. So that means that there's something else going on in the market, okay, that we're not getting what we expected to get. So what do? You cut your losses. On this candle here, you cut your losses. You're done. You're out. Okay, so on this one here, it would have been, depending on where you got out at, it would have been a loss of maybe up to 10 pips max. Okay, but this is why you have the rules, to get you out of situations that potentially could have been a lot worse, right? So imagine if you would have just kept your original stop loss here, then you would have been out, instead of 10 pips, you would have been out 30 pips. So that was the AUD pairs that we mentioned in the chat. Some made it, some didn't. And some didn't trigger. But now you know what you're looking for. Euro Pound gave us a nice type 1 setup with a railroad track. This was a very nice trade. All the way down, well over 100 pips. And of course, because it is a railroad track, you don't have to wait for it to go to catch up. So you could have had your entry here, your stop loss there, and then you just write it down. All right, so let's take a look at Euro USD here. And as you can see, Euro USD, if you were looking to potentially trade this, okay, if you were looking to potentially trade it, you could have seen a lot of different opportunities to get into the trade, right? Or to get into a trade, right? So you could have been looking at something like this, right? You could have been looking at something like that, and that's completely fine because you see an M formation trading out of the edge of Asia, right? And if you would have gotten into the trade, if you would have gotten in here and here, you start counting 6 candles, 2, 4, 6. Are you in substantial profit? No. So you would have gotten out of the trade, right? You would have gotten out of the trade. And on this one, depending on where you got out at, you could have had, if you got out on the 6th candle, which is this one here, then you would have basically broken even on that trade. Okay. Now, if you would have waited and kept looking at the trade, you would have seen that you would have gotten, another opportunity, and that would have been here. So you could have gotten that one there, But if you didn't get it, that's perfectly fine. That's not a problem. If you didn't see it, then you don't see it. And that's the whole point, is that if you don't see the trade develop, if you don't see the formation, then you don't trade it. And then that's fine. It's better to see the formation clearly and be in that trade than not to see the formation and be in the trade and lose because you don't know what's happening, right? So if you don't see it, that's okay. But you're not trading it also. You're only trading it if you see it. And in this one, you could have seen that, what I just showed you. You could have seen the M formation here, trading out of the Asian range. And it just didn't work out. And that's okay. It's not a big deal. Okay? Your rules would have protected you from losing PY. Euro JPY, here we had a good setup here on Euro JPY. We had a nice little Asian range. And then trading out of the edge here, what do we end up getting? We end up getting a star formation here, right? So star formation is like railroad tracks where you can enter right after it. You don't need to wait for it to cross catch up, right? Your stop loss would have been up here, and then your goal would have been to get to at least to Mayo, okay, if not water. Being that water is so close, the goal is try to make at least 30 pips or so out of it, right? So depending on how you took this trade, you would have been in profit definitely at least 15 pips or so, right, before the trade went against you. Or just not even went against you, but just went sideways for a while, And so if you're thinking about it and you think 6 candles, you would have been here on this candle. The question is, are you in substantial profit? If you entered here and you're already over here, you're only, 10 pips into profit, which is fine, but that's not substantial profit. So what do? You cut your losses. Take your 10 pips and be done with it. Like, don't stress about a stupid trade that's not moving. Like, there's nothing you can do about it, so there's no reason to stress out over it at all. At all. If it's not moving, cool. Remove yourself from the situation and let it go and move on to something else. It's okay. Not a big deal. But you see, you got a second opportunity over here when you got railroad tracks. So you could have had this as an entry. So this would have been a type 2 setup here. And then you would have gotten the trade, right? So just because it doesn't happen right away or when you expect it, doesn't mean that it's not going to happen. It could happen later because they're waiting for more contracts to get in for this move to happen. Okay, if they don't have enough contracts to go all the way down, guess what? They're not going to go all the way down. They're going to come back up to get more contracts, and then they'll move down. Yeah, guys. So that was it. That was all the trade setups. So I hope that that you learned something today from these different trade setups that I showed you. Again, if you're not part of the chat, links will be in the description, and you can join us for free on the chat, and also join us on fxntrading.com and be a free member. Okay. If anybody is still interested in the mentorship, I have a couple spots left. So just make sure to grab those before they go out. All right. All right, guys. Until the next time, leave a comment. Let me know what you thought about this. Let me know if you've traded anything. What did you guys trade? I'm very interested to find out, are you guys trading London session, US session? I would really like to know what session you guys are trading mostly, because if you guys are trading US session, then I could concentrate more on the US session trades rather than London. I'm doing a lot of London session because that's when I'm trading the most is during London. But let me know, guys, in the comments if you're trading US or London session. All right. Until next time, guys, enjoy the weekend. Guys, one last thing. Thank you so much for watching my videos. I really appreciate the fact that you take the time to watch my videos. I really hope that I've added value in each of the videos that I make for you guys, and I hope that you're learning something. As always, guys, please make sure you subscribe to the channel. Please like and share the videos if you found value in them. And also, don't forget to visit our website at www.fxntradinggroup.com. Once again, guys, thank you so much. I'm truly blessed.